But is the tech sector about to change the face of dividend investing? More and more tech companies paying out dividends, investors are being forced to rethink their strategies.
But what does this mean for the future of income investing? And could it lead to a shift away from traditional dividend-paying companies?
Join us as we explore the implications of this trend and what it could mean for your portfolio. Good evening, and welcome to our analysis of the latest news in the world of finance and technology. Today, we're taking a closer look at the growing trend of tech companies paying dividends and what this means for income investors. As we know, the tech sector has been a major driver of growth in recent years, with companies like Alphabet, Meta Platforms, and Salesforce leading the way. But what's interesting is that these companies are now starting to pay dividends, which is a significant shift in their business model. So what does this mean for income investors? It means that they now have more options for generating income from their investments. Traditionally, income investors have focused on dividend-paying companies in the financial sector, such as banks and insurance companies. But with the rise of tech companies paying dividends, investors now have a new source of income to consider. But what about the potential risks associated with investing in tech stocks for income? Well, one of the main risks is that these companies are still relatively new to paying dividends, and their dividend payments may not be as stable or consistent as those of more established companies. Another risk is that the tech sector is highly volatile, and the value of these companies can fluctuate rapidly. This means that investors may face significant losses if they invest in tech stocks for income and the sector experiences a downturn. Despite these risks, many investors are still attracted to the tech sector for its potential for high returns. With the growing number of tech companies paying dividends, investors now have a new way to generate income from their investments. But what about the role of regulation in private markets? Regulation can play a significant role in driving change in private markets, including the potential for increased transparency and accountability. This can be beneficial for investors, as it can help to reduce the risk of investing in private markets and provide more protection for investors. But however, regulation can also be a challenge for private markets, as it can increase complexity and costs. This can make it more difficult for companies to raise capital and for investors to access private markets. But now, in conclusion, the growing trend of tech companies paying dividends is a significant development in the world on finance and technology. There are potential risks associated with investing in tech stocks for income. Many investors are still attracted to the sector for its potential for high returns. With the growing number of tech companies paying dividends, investors now have a new way to generate income from their investments. So what's the bottom line? Well, the growing trend of tech companies paying dividends is a significant development that could have a major impact on the world of finance and technology. While there are potential risks associated with investing in tech stocks for income, many investors are still attracted to the sector for its potential for high returns. That I am your name, and thank you for joining me tonight. If you have any questions or comments, please don't hesitate to reach out.